What is going on, everybody? It is a naughty investor here. I hope everyone's having a really great day. And today I wanted to give you guys a tutorial on how to make $100 a day trading cryptocurrencies. Now, this is a technique that I've used a lot in the past. I have moved on to more advanced techniques that I will cover in the future. And if you want to see those in the future, make sure you subscribe to the channel and hit the bell notification icon. That's very important. That way you're notified whenever I upload. I don't only do technical analysis videos, I do news videos, I do reviews, but I do try and throw in at least 1 or 2 technical analysis videos per week. Now, this technique, at my best, I was making over $100 a day doing, and it really wasn't that time, it didn't require that much time. So this is a great technique for people who work a full-time job and only have a couple, maybe 4 hours at night to themselves and want to, make a little bit extra money. This is a great technique for busy people who do other things, who have businesses, whatever. This is not the most time restricted, I guess, technique that's out there. So that is a good bonus for it. Generally speaking, if you're a beginner and you understand this technique, you learn it, you practice it, you will likely start off with a 5-to-1 ratio, meaning you're gonna have 5 good trades in one, bad trade. Not necessarily a loss, but something where you might miss the boat a little bit, and you might have to hodl the cryptocurrency a little bit longer to make your money back. So overall, it's really good, and this type of trading technique usually focuses on, stacking up the small gains, stacking up 5, 6, 7, up to, 10, 15% profits, and just keep stacking those up every time you do it, every day or every couple days, whenever you have time to do it. So it's definitely a good technique. You could easily make $100 a day. If you have less money, of course, if you're starting off with less initial capital, of course, you're going to start off making a little bit less than $100 a day. However, if you start off with more capital, you can make more than $100 a day. I know people personally in this industry who make $300-400 a day doing this technique. That was an email, and they love it. It's a really simple technique. It's not that difficult to do, and it takes advantage of price movement. So what am I talking about? Well, first off, I'm using KuCoin. You don't have to. This is just what I use. There's also Binance, and there's a lot of different exchanges out there. Just make sure they have some form of trading software built into them. If they don't, you could use TradingView. Now, before we do this, we are going to go over to CoinMarketCap. All right, now, this CoinMarketCap starts off with all the coins by market cap. Of course, that's why it's called CoinMarketCap. What some people don't know is you could also switch around the metric for which it's listed. Now, what we're going to be doing is we're going to go over to KuCoin. So you're going to search it. And do not click KuCoin as the cryptocurrency, because KuCoin has their own cryptocurrency. Don't click that. Binance also has their own coin. Do not click that. You're going to click it under the exchange. You want to go into the exchange, okay? Now, I have it already set on volume, but let's just say I had it on price. So it comes up on price, and this is gonna, list it by price. We don't want that. We want it for volume. So you're gonna click 24-hour volume, and you're gonna pick one of likely the top 15 over here as far as volume. Generally speaking, try and go for things that have smaller market caps. So I'm not going to be really doing a ton of trading. Things that have larger market caps, I hodl more. Things that have smaller market caps are things I trade more. That's generally my rule. Now, as you can see over here, I have Dragon Chain up, and that is in the top 15 over on here. But there's a lot of different ones. You're going to pick one of them. You're going to have to do this analysis yourself and see if there's a potential opportunity here. Today, there was a big opportunity, and I'm going to show you that, how Bollinger Bands could have helped you, how RSI could have helped you, how this technique could have helped you easily stack up a positive gain for the day. So here's the chart for Dragon Chain. This is paired with Ethereum. Over here on the volume, it was with Bitcoin, but there's going to be some price arbitrage between the two. But nonetheless, it still has a good amount of volume, all right? So we're going to go, we're going to go and we have to insert our indicators, okay? So the first thing we want to put in is Bollinger Bands. Bollinger Bands. Let me just back out of this a bit. And we're also going to put on RSI. Here we go. Actually, let me do this. See, which gives you guys the best view of things. Yeah, so this would be the best view for you guys. So what you want to do is you want to buy when you see a red candlestick pop outside of the Bollinger Band. And the Bollinger Band is this blue type of blobby looking overlay thing. You're going to want to buy when the red candlestick goes under the Bollinger Band, not over, like over here, because then you're buying at a high. You're buying at the high end of the Bollinger Band. You want to buy at the low end. So let me go over to this, put on my brush, and so right here, right around one of these is when you would have bought, because it's just poking out of the Bollinger Band. Now, the other thing you have to look for is RSI. And I do hope you guys could see the RSI okay. If not, in my next video, I will change it up a bit. But as you can see, there's a dip in RSI. So there is a dip in RSI. So you see it come from over here down to over here. And what you're going to basically be doing is looking for two things. RSI to dip and red candlestick out of the Bollinger Band. Now, what would have happened if you bought this? And this was today, because we're on the 30-minute mark. So this was today. This was yet the 24th, a couple hours ago, and you would have bought right outside the Bollinger Band. Okay, and even if you bought, you have to sometimes look at the RSI, because let's say you see it outside the Bollinger Band, but you only see that first candlestick. If you see RSI dipping, you're gonna want to wait till you see the bottom candlestick, which was right here. Now, in the future, I'm going to show you guys other indicators you could use to know if you're buying at the right time with the Bollinger Band, but let's just assume you did it and you just bought at the first red candlestick, which is right here, once we saw RSI dip. Even though preferably you would have want to wait a little bit. There's other indicators, again, like the MACD indicator that you could use to see a MACD crossing. And what you're going to basically be doing is you're going to be buying it, let's say right here. You're going to see it outside the Bollinger Band. It's going to dip a little bit down. You're not going to sell anytime yet. And then once you see the Bollinger Band shrink a little bit, constrict a little bit. So over here you see it was really wide and it shrunk because the distance between these two is a lot less than the distance between these two. So it shrinks, and you would have sold once it shrinks. Once the Bollinger Band shrinks down and you see prices start to come back to where they were, that's when you sell. So what the Bollinger Band does is it measures price extremities. That's the easiest way I could put it. And you're buying at the extreme lows and you're selling when it comes back to reality. If you wanted to lose money, you could buy at the extreme highs and sell when it comes back to realities, but you don't want to do that. You want to buy on the red end, you want to buy at selling volume, okay? So as you can see, there's a lot more selling volume over here than there is buying volume. See, the green is buying volume, the red is selling volume. So you're buying, so three things you want to look for: selling volume, RSI dip, and outside the Bollinger Band. So you would have bought Dragon Chain, let's say at 0.0016 Ethereum, okay? You would have went like that, and you see it start to constrict. Now, depending on how much risk you want to take, you could wait for it to even get a little bit higher once it starts to really come back. It depends on you. How much risk do you want to take? There is risk involved. However, not as much risk, and the more indicators you use, the better you get at it. You could easily see yourself making a lot more money doing this, get better at it, learn more indicators, learn more techniques. This is one of the beginner strategies that I use. So I would buy it right here at 0.0016 Ethereum, and I would have sold right over here. So I bought at 0.00164 Ethereum, and I would have sold at 0.00168 Ethereum. Okay, I don't know the conversion off right at the top of my head. Let me see.
0.00164 Ethereum. Just so I can convert it to dollars for you. 0.00164. Ooh. Convert. So you would have been buying it at $1.35. Okay. Let's make sure I had that right. So about 164. Yeah, about 164. And you would have been selling it at 168. Well, 0017. So you're buying there. Ooh. 0,
I'm just going to double check. And you would have been selling at 0017. 0.0017. So 40 cents. So you would have been buying at $1.35, selling at $1.40. Now, of course, that's only a 5-cent profit, but that's only if you're investing $1. Okay, if you're using a couple $100 to trade, you know, to really ideally a few $1,000s to trade, once you work your way up, you can make more money. All right, so that itself is not a huge trade, but again, that's playing it safe. Because like I said, if you want to wait a little bit longer to see this constrict more, you can make more money. All right, so it's a scale. How much risk versus how much reward. If you want to get in and get out and only make, you know, a 5% profit, that's fine. If you want to wait it out a little bit and take more risk and make it 10%, that's fine too. But like I said, this strategy uses price extremities, and it stacks up those small gains, those 5 to 10% gains typically is what I get with them. But when you're doing it a couple times a day and you're using you know, thousands of dollars, let's just say you're using $1,000, and every day, or say you're using $2,000, and every day you're making a 5% gain, okay? That's not bad money. That's not. You could definitely make $100 a day, but my advice to you would be start off with a few $100, get the hang of it, learn this technique, learn other techniques I will do in the future to show you guys how exactly I do it, and eventually move your way up. Build your way up to a couple $1,000s. And then you could start you start doing a little bit better stuff, some more indicators, and you could easily make over $100 a day. When at the top of my trading, I don't trade a ton anymore. I still do trading, okay? I do trading, but I don't do this technique as much anymore. I do other techniques that I will cover in the future, but this is a great beginner technique. This is something you could easily bring in some extra money to, you know, build your nest egg up, to, you know, pay some bills. But again, only do it with money you could afford to lose, because there is risk involved. A great thing you could do is, once you're done doing these trades, convert it into whatever cryptocurrency you're bullish on. Let's say you're bullish on Bitcoin, you're bullish on XRP, you're bullish on Ethereum. So you take the gains from this, those 5 to 10% gains, and you convert it into those cryptocurrencies and you hold it. So people have asked me, do I hodl or do I trade? And I tell them do both. Do the trades with the small cap cryptocurrencies, take the profits from those trades, reinvest them into things that you hodl, and you could really exponentially grow your wealth. So I've made quite a lot of money doing this, and I do more advanced stuff now, but when I was first starting out, this was a godsend. This was one of the easiest, safest ways to trade. And again, doing this at my prime, I had like a 8, I think at the very best I had like a 10-to-1 ratio when I was doing just this. So, but as a beginner, you'll probably start off with a 4 to 5-to-1 ratio. You know, 5% gains, and you'll have like a 5% loss, right? So I hope you guys enjoyed this video, and I hope I was informative, and I hope I really helped you guys out. If you want more trading videos in the future, make sure you subscribe, hit the bell notification icon, and comment below. Comment if you want more trading videos, because I could turn this into a weekly series very easily, because I have at least 10 different techniques on the top of my head that I can do videos on. Hope you guys have a great day, and I will see you in the next video. See you guys. Peace.